Blockchain is a new technology that is constantly in the news, with a lot of people saying how revolutionary it is. But what is blockchain? How does it work, and what are some practical uses for this new technology? To help you answer these questions, we have put together this video just for you. But before that, don't forget to like, share, and subscribe for more content just like this. What is blockchain? In simple terms, blockchain is a system of recording information in a way that makes it difficult or impossible to change, hack, or cheat the system. How does blockchain work? A simple analogy for how blockchain technology works can be compared to how a Google Docs document works. When you create a Google Doc and share it with a group of people, the document is simply distributed instead of copied or transferred. This creates a decentralized distribution chain that gives everyone access to the base document at the same time. No one is locked out awaiting changes from another party, while all modifications to the document are being recorded in real time, making changes completely transparent. A significant gap to note, however, is that unlike Google Docs, original content and data on the blockchain cannot be modified once written, adding to its level of security. Of course, blockchain is more complicated than a Google Doc, but the analogy is apt because it illustrates critical ideas of the technology. Uses of blockchain technology. Number 1. Banking and finance. Perhaps no industry stands to benefit from integrating blockchain into its business operations more than banking. Financial institutions only operate during business hours, usually 5 days a week. That means if you try to deposit a check on Friday at 6 p.m., you will likely have to wait until Monday morning to see that money hit your account. Even if you do make your deposit during business hours, the transaction can still take 1 to 3 days to verify due to the sheer volume of transactions that banks need to settle. Blockchain, on the other hand, never sleeps. By integrating blockchain into banks, consumers can see their transactions processed in as little as 10 minutes, basically the time it takes to add a block to the blockchain, regardless of holidays or the time of day or week. With blockchain, banks also have the opportunity to exchange funds between institutions more quickly and securely. Number 2. Currency. Blockchain forms the bedrock for cryptocurrencies like Bitcoin. The US dollar is controlled by the Federal Reserve. Under this central authority system, a user's data and currency are technically at the whim of their bank or government. If a user's bank is hacked, the client's private information is at risk. If the client's bank collapses or the client lives in a country with an unstable government, the value of their currency may be at risk. By spreading its operations across a network of computers, blockchain allows Bitcoin and other cryptocurrencies to operate without the need for a central authority. This not only reduces the risk, but also eliminates many of the processing and transaction fees. It can also give those in countries with unstable currencies or financial infrastructures a more stable currency with more applications and a wider network of individuals and institutions with whom they can do business, both domestically and internationally. Number 3. Smart contracts. A smart contract is a computer code that can be built into the blockchain to facilitate, verify, or negotiate a contract agreement. Smart contracts operate under a set of conditions to which users agree. When those conditions are met, the terms of the agreement are automatically carried out. Say, for example, that a potential tenant would like to lease an apartment using a smart contract. The landlord agrees to give the tenant the door code to the apartment as soon as the tenant pays the security deposit. Both the tenant and the landlord would send their respective portions of the deal to the smart contract, which would hold onto and automatically exchange the door code for the security deposit on the date when the lease begins. If the landlord doesn't supply the door code by the lease date, then the smart contract refunds the security deposit. This would eliminate the fees and processes typically associated with the use of a notary, a third-party mediator, or attorneys. And number 4, voting. Blockchain could be used to facilitate a modern voting system. Voting with blockchain carries the potential to eliminate election fraud and boost voter turnout, as was tested in the November 2018 midterm elections in West Virginia. Using blockchain in this way would make votes nearly impossible to tamper with. The blockchain protocol would also maintain transparency in the electoral process, reducing the personal need to conduct an election and providing officials with nearly instant results. This would eliminate the need for recounts or any real concern that fraud might threaten the election. In conclusion, considering its ever-growing popularity, it can be simply assumed that blockchain will be the future as it solves every single problem the traditional systems have. Like, share, and subscribe for more content just like this.